Search Dynamics blog. David, thank you so much for joining us today.
Elijah, thanks for having me on. It's a pleasure to be here.
All right, well, I'd first like to discuss about Brexit. Now, you recently wrote that the elites had a lot to lose if the Brexit referendum succeeded. So exactly what did the elites have to lose in this referendum?
There's a couple things, and they're interrelated. I think if you look at all of the politicians in this country that were coming out in support of the Remain vote, and for like Joe Biden last weekend just railed on the people who voted for the Brexit. These are all kind of they're all part of the New World Order, one world, one government politicians. They believe in a strong centralized government that basically controls the population and tells us how to live. And the European Union was part of their plan to try and stretch that throughout the West. And so with England voting to leave, all of a sudden some of these other EU countries are going to look around and say, well, I don't know how we're benefiting from this, because the ECB and the EU they're letting our banks collapse, they're not helping us out, and they're stealing our assets. I mean, look at what happened to Greece. That was a classic plundering of a country, the way the IMF goes around and plunders third world countries. And that's not to say that Greece needed to implement austerity and restructure itself. But so essentially, to the extent that England leaving the EU undermines this movement for centralized government control, it undermines all of that. And so these guys had that to lose. And if you look at all the people who were out there saying, oh, the world's going to come to an end if England leaves the EU, guys like George Soros, they're all part of that movement. And it also, and I didn't even think about this until after the event, but part of the financial control that they exert is through the City of London. So obviously, if England pulls out of the EU, it's going to somewhat sever the control that the ECB and Brussels and the BIF have been able to exert through the City of London. And I think and so really that's what they had at stake, is it these sort of centralized control politicians, they basically lost a big chunk of their power and I still don't, I'm not convinced that the saga's over. I think they're still going to try and figure out a way to remedy the situation. And I don't know how they'll do it, and I don't know if they'll be able to do it. But I don't think the story's over yet. If you notice, Cameron came out and said there's no rush to implement Article 50. And I think it's a way for him to say, let's buy some time here and see if we can reverse this.
So you were talking about that you think they're going to try to remedy the situation. So you're saying that basically Brexit might not actually happen after all?
I think it's a possibility, yeah.
So, I mean, how do you see them trying to do this? Because the people voted, and wouldn't there be some kind of, do you see that there would be some kind of uprising if the UK actually ended up not leaving the European Union? Don't you think that the people would be kind of upset about that?
What are they going to do about it? I mean, since when do governments ultimately ever do what the people want them to do?
Right.
You know what I mean? I mean, that's the thing. I mean, these are politicians that are in there, they're entrenched, and I mean, what are the people going to do? I don't think that populations in this day and age have it in them to revolt. I mean, we should have had a revolt in this country a long time ago, and it's people, everything they throw at us, people just turn the other cheek and go on with their life.
All right. Well, I'd like to move now to, you were talking about in that recent article about how Brexit will make it basically very hard for Western central banks to manipulate the price of gold and silver. Basically, you said that they will be unable to do this anymore. Did you want to discuss about this?
Well, I think, yeah, and really what that is, and I don't know that it's necessarily directly correlated with Brexit. I do think that Brexit was hung out there kind of as, I don't want to call it a false flag, but just kind of like a distraction. You know, supposedly everything was going to collapse if England voted for the Brexit. Well, here we are, and nothing's collapsed. And that's not to say that the central banks aren't in there, you know, doing their best to keep everything elevated. But I do think that it's put a lot more focus for a lot more people on this idea of fiat currencies versus precious metals. And I think we're starting to see a lot more extremely wealthy people accumulate gold and silver, and a lot more people in general. And so I think what's going to happen here is, obviously your audience knows that for at least the last 20 years, the central banks have been manipulating the price of precious metals via the paper markets, the LBMA, the COMEX, and also OTC derivatives, which, you know, we have no idea how extreme the manipulation is there because it's too opaque. We can't see really what's going on, other than we know there's a lot of OTC derivatives outstanding that they have to report, but we don't know how they're structured. So I think what's starting to happen, and I think you're starting to see the stress show up in silver right now, is that the demand for physical gold and silver that people want to take possession of, they want to have it delivered, because they're starting to understand the difference between personal possession versus custodial risk also. I think at some point that's going to overwhelm their ability to keep the price down using paper derivative forms of gold and silver. And what I think the Brexit did, it's not a catalyst per se of that, but what I do think it does is it makes people examine the issues of fiat currency versus real currency a lot more closely. I mean, and what's interesting about that is you get a guy like Soros out there who's warning that, you know, Brexit will be the end of the world. In fact, I think he was out with a statement last night saying that, and yet his largest holding right now is gold.
Definitely. And I was wondering if you could expand a little bit on that, about why you think George Soros, he announced a little while ago how he was moving some of his assets out of stocks and also actually moving it from stocks into gold. Why do you think he's been doing that?
Well, if anyone understands the differences between paper currency and real money, it's him, right? I mean, this is the guy who basically brought down the pound. That was his home run trade that put him on the map and made him a billionaire. And so, in one sense, he wants to be part of the, you know, he's one of the engineers of this centralized governmental system that these guys are trying to put in place. But he also understands the need to hedge his bet, and that's exactly what he's doing here by moving into gold. And now his published holdings are in the form of GLD, but I would find it very hard to believe if he didn't have his own personal storage of gold that he keeps in a vault that's guarded, and he probably has hundreds of millions of dollars worth of physical gold that he keeps.
You've also talked about how Brexit, it seems like you think it's not actually that big of a deal, and it's actually being used as a distraction from some of the more important issues like the collapsing economy, the corruption of the U.S. political system, and the U.S. military belligerence towards Russia and China. Did you want to discuss a little bit about this?
Sure. I wouldn't say that. I'm not saying that it's not a big deal. I do think that it is significant. But the media and the propaganda and the pro-centralized government establishment politicians were trying to scare us into thinking that, you know, England pulls out of Brexit, you know, England's going to collapse and it's going to send the whole world into a recession. In fact, again, I think Soros was on the tape today making some statement to that effect. And I have yet to read any analysis anywhere, or even think of ways on my own in which England's economy is so important to the world economy or even to the EU economy. I mean, aside from oil, I'm not really sure I'm not really sure what England's importance is to the global economic system. You know what I mean? And so if England decides to pull out of the EU because people want self-determination there, that's a positive, actually. I honestly don't. I just think that they were using this propaganda scare tactics and false flag tactics to try and scare everyone into, at least the people in England to vote for Remain. But see now, I mean, the global economy is collapsing and the financial system's collapsing anyway. It doesn't matter whether or not England pulls out of the EU. That's ongoing. It's been going on way before this even became an issue. But now they can use that as their cover story. Well, this wouldn't have happened if England decided to remain. So we're going to have to do what we need to do to save things, which means print money and take away more of your rights. And so, I mean, what's really going on beneath the surface, and again, the way the banks are trading is a signal that this is happening, is that there's a financial collapse going on. Because everyone knows the financial system's in way worse shape now than it was in '08 when it blew up. There's an economic collapse going on. I mean, if you look at the real economic data in this country, like the freight data and some of the other hardcore privately sourced data, not the government-produced, manipulated data. I mean, there's a major slowdown going on in this country. If you look at the retail sector, I mean, the retail stocks are getting annihilated. And if you look at consumer spending and consumption, and that's way down. People have a lot less disposable income to spend for a lot of reasons. And I think if they can just point, if the elitists can point to something like Brexit and blame it on that, they can deflect the blame from themselves because it's their own policies that have caused this issue. And then, the militarism, that's a whole other issue. That's a whole discussion in and of itself. But essentially, the U.S. has accelerated its military belligerence toward Russia and China. I mean, NATO, which is really the U.S., has set up bases all around the Russian border. The U.S. is trying to escalate, what's going on in Syria. And Russia's just kind of sitting there, like, trying not to stir the pot. But what would people in this country do if all of a sudden Russia started putting military bases in Mexico and Cuba and Canada? Not that they necessarily would have that ability the way the U.S. does via NATO, in Eastern Europe, but that's essentially the equivalent of what the U.S. is doing over there. And this whole Brexit thing, where England pulling out of the EU is supposed to cause global collapse, that kind of deflects the attention away from that. Does that make sense?
Definitely. And I was wondering, I guess, did you want to expand a little bit on the collapsing economy that you see is happening right now? I know you recently wrote about how, a lot of people see for example, the unemployment rate, and it's super low right now. But if you look at a lot of people have talked about how that's basically a false perception, or that's basically a false indicator, because what they're not showing you is that we have an extremely low labor participation rate. Did you want to expand on this?
Sure. And that's, again, over the last several decades, the government has changed the way that it calculates the unemployment rate, and they do that to suit their own purposes. It's the same thing that they've been doing with the CPI. They started rejiggering the CPI when Arthur Burns, who was the Federal Reserve Chairman when Nixon was in office, and they started rejiggering how they calculate inflation because they knew when they removed the gold standard that it was going to cause monetary inflation, which then would show up as price inflation. And it has shown up as price inflation. I mean, look at the cost of a college education back in 1975 or 1980 versus now. Look at the cost of an automobile. How about the cost of a house? I mean, the house that we moved into in 1969 was $40,000, and my father puts 50% down as his equity. Fast forward today, that's essentially a $600,000 house, and the guys who are buying it are putting 20,000 down as equity, 3%. So, and that's a product of the extreme inflation and monetary inflation that's kind of hidden. And so what they do is they find ways to massage that data out of their calculations. So with the unemployment rate, the unemployment rate is the number of people who are looking for a job divided by the number of people who have a job plus the number of people who are looking for a job. That's your unemployment rate. Well, what they leave out of the narrative is the fact that the actual size of the labor force as a percentage of the working age population has been dropping like a stone for the last 20 years. I mean, we're back to, and these are just round numbers, I know they're not exact, but the labor force participation rate right now is about at 62%. Okay? And it got up, I think, into the high 60s, it might have even hit 70% at one point. And what that means is that the percentage of the working age population that's considered either to be looking for a job or have a job is now at 62% of the entire working age population. So what you've had is a huge, the pool of people who are considered part of the working age population but aren't considered to be looking for a job or have a job, that number of people has expanded to a record high. And in fact, in terms of percentages, we're back to the percentage that it was in the late 70s. And back then, this was largely a one-income household economy. We were just sort of transitioning into the era of having a two-income household. So to me, that's really your best measure of how healthy the labor market is and how healthy the employment or unemployment rate is. So when they say that it's a 5% unemployment rate, that number is not comparable to when we had double-digit unemployment rates in the late 70s, because the calculations are completely different.
Now, I know we were talking about before the interview about another thing that seems to show the strength of some institutions in the economy, such as banks. You were talking about how big bank stocks are actually underperforming the S&P. Did you want to expand on how this is significant?
Yes, and actually, I mean, when you're looking at a market where the Fed is doing everything it can to at least keep the S&P index and the Dow index up as much as possible, you've got these subsectors that are selling off hard. You've got the freight transportation sector has been selling off hard. Retail's been selling off hard. And the banks have been underperforming. I mean, if you have a situation where the S&P is near an all-time high, and a lot of these big money center banks, these too big to fail banks, they're not even close to their all-time high. That's a message right there that something's wrong. The market doesn't trust the financial stability of these big banks. And that's what's going on. And when you want to look underneath the surface, all of these banks have the same balance sheet issues that they had in 2008. It's just they changed the accounting rules, so it makes it easier for these banks to move things off balance sheet or to make their financials look a lot better than they really are. For instance, the banks are allowed to mark up their what used to be considered positions, debt positions, and assets that they would hold with the intention of selling. Well, they can't sell them because there's not a bid for them, so they move them into their long-term asset category, and then they mark the price up, and as the price gets marked up, they can accrete that markup amount into their net income. Well, it's a non-cash event. It's not an economic event. They're not really taking in cash for that income, but on their income statement, it records as income, so it makes their earnings look better. And all the market cares about is net income and PE. They're not looking at how that income is derived or the quality of that income. So from that standpoint, it makes the banks look a lot better than they really are. But the truth of the matter is, if you say the Fed printed essentially $4 trillion and about half of it went to finance the government deficit because they used to say half, and these are just rough numbers, they used half of it to buy government bonds. The other half is sitting on the big bank balance sheets in what's known as the excess reserve account at the Federal Reserve. And if that excess reserve account didn't exist, I think all these banks would have collapsed.
So I guess looking into the future, I know some other guests that I've had on are seeing that basically the whole financial system could collapse and a lot of banks could collapse. I mean, and it could even be worse than the crisis of 2008. Do you see that happening in the future? And if so, how soon do you see that happening?
I'll tell you, Elijah, I kind of stopped putting time frame predictions on this a long time ago because it's just with all the intervention that's going on by the central banks and the governments, it's impossible to really put a time frame on it. So, for instance, what happened in 2008, I thought that was going to happen by 2005. And then what happened in 2008, I thought that was going to lead to a complete restructuring and a cleansing, but they were able to kick the can down the road again. And it seems like at every point where they're about ready to smash into the wall, they pull a rabbit out of their hat. And I don't know, again, it's impossible to know if there's a rabbit for them to pull out of the hat this time or not. No one knows. I'm not even sure they know. But I do know that at some point, everything's going to get beyond their ability to control it. And I do think that the Brexit event is a symptom of their ability to lose control, that they're losing control of it. And also the fact that they can't keep down the price of gold like they have for the last 5 years. That's another indicator that they're starting to lose a little bit of control. Negative interest rates everywhere. I mean, if there's not a signal of an unstable financial system, it's negative interest rates. I mean, negative interest rates, you should not have you should not get paid to borrow money, right? So if you're lending the Germany money for 10 years, you're actually paying them to take it. I mean, that's an upside down, completely broken system. The volatility that we're seeing in the markets right now. I mean, I had to laugh because yesterday there was a banner on Fox Business at the bottom that said stock stabilize. And I'm looking at that and I'm like, I had to rub my eyes. I'm like, are these guys on drugs? I mean, you basically had the S&P drop about 4% in 2 days, and then it bounces back up 4%. And they're calling that stability? If anything, that shows you how unstable the system really is. So I think they're reaching a point again where they're starting to lose control of all these variables that they've been able to control. And it's just the same thing that happened in 2008. They lost control. And everyone wants to blame what happened ultimately on the Lehman collapse, but it wasn't Lehman. It was when Goldman Sachs and AIG blew up. But they noticed that they addressed that right away by printing money and giving taxpayer money to bail out the banks. Something like that's going to come up again. I mean, and I don't know that it's necessarily Deutsche Bank because everyone knows about Deutsche Bank. There's going to be something else that jumps out of the corner that takes everyone by surprise. And there's just no way of telling what that is, and there's no way of knowing exactly when it's going to happen. And then the last issue there is whether or not they'll have a rabbit to be able to pull out of their hat to kick the can down the road yet again. My suspicion is that they're running out of tricks, and that's why we're seeing the escalation of militarism, especially by the U.S., because if anything, it's the U.S. who's losing control. They're losing control over the dollar. They're losing control over the dollar's use as the reserve currency. They've lost a lot of their military hegemony to both Russia and China. And that, to me, is what's really frightening, is if we lose control again and they can't regain control, it's the old adage, when all else fails, start a war. And I think that's probably where we're ultimately headed, unfortunately.
So as far as investing, what is your perspective on investments that will kind of withstand the collapse of the financial system?
Depends on how bearish you want to be. I mean, ultimately, if it depends on whether or not you think there's going to be some semblance of systemic continuity, meaning that the financial institutions and the custodians don't all collapse or not. I mean, if you think that whatever's coming at us, as we get through it, there's going to be some institutions that remain standing, then I think you're okay leaving some of your money inside the financial system. But I think for anyone who really kind of has the same outlook as I do, I think you got to try and get as much money as you can out of the system, and you got to stick it in physical gold and silver and keep your own possession of it. I think, and again, if you look at MF Global, that's, to me, is the quintessential example of custodial risk. I mean, the people who had their money with MF Global lost it. And now eventually through the court system, JP Morgan and some of the other people who were involved there had to cough some of it up and return it to what became the creditors of MF Global. But for instance, the guys who were using MF Global for trading silver on the COMEX and who had silver sitting in COMEX warehouses, they never got to take possession of that. They got paid off in cash. And I mean, what good is owning silver if ultimately you're going to get paid off in cash? You know what I mean? And that's the same problem with the ETFs like GLD or SLV. I mean, ultimately, when you go to sell that, you get paid off in cash. Well, you don't own gold and silver so that just so that it goes up in price and you can get more. The value of the cash you get in return when you sell it goes up, because that's irrelevant. You want to own gold and silver to have possession of real money, a hard asset that doesn't have anyone else's counterparty risk attached to it. And so that's what I would do. I mean, I would say you got to have at least 50% of your assets in physical gold and silver that you keep yourself. And if you think that there's going to be some sort of semblance of systemic continuity, then you definitely want to own mining stocks, because to the extent that the prices of gold and silver go up, the value of these mining stocks will go up 2, 3, 4, 5x.
Before we let you go, Dave, would you like to, share with the viewers where they can find out more, and any last thoughts you'd like to add?
Sure. Again, thanks for having me on. I've really enjoyed this. This has been very fun and interesting and educational for me as well. My blog is Investment Research Dynamics, which you can get at investmentresearchdynamics.com. And I also publish a mining stock journal, which is a bi-monthly newsletter or report where I give what I believe is kind of my own unique proprietary insight on the gold and silver market. And then I focus on junior mining stocks. So I try to present a junior mining stock investment idea that's off the radar screen of most people. And then the other publication I have is the Short Sellers Journal. And that's a weekly publication where I give my insight and commentary on what's going on in the market in general, and then I present a couple of short sell ideas. And this is my sort of back to my point about how even though the S&P and the Dow are being propped up and they're approaching all-time highs, some sectors are getting just annihilated. And amazingly, some of my picks over the last 2 or 3 months have actually dropped between 15 and 20%, which is amazing considering it seems like everything is going up in this market.
All right. Well, once again, David Kranzler, thank you so much for your time.